Market Stan Shamu from IG in Melbourne joins us now. Stan, the US dollar strength today, the theme of trade there. What was behind that strength?
Morning, yeah, absolutely. We did see those FOMC minutes being the main driver of US dollar strength. Of course, early on in the session, equities were relatively steady. We had those ADP non-farm employment change numbers coming in better than expected at 215,000. I think most analysts were expecting about 134,000. Although we did see this strong ADP reading, we did see the unemployment claims actually spike a little bit higher. But it seemed earlier on investors were really not concerned that much about it. But later on, when those FOMC minutes came out, that's when we really saw risk come off. The US dollar came back into its own with a bit of a strong performance there. Across the pairs, we saw the Aussie dollar dropped from around 1.052 down to 1.047. The euro fell through 131 to about 130. So that really set the tone for the rest of the session. Of course, the equities have remained relatively steady, relatively flat, so to say. But we do expect to see this feed through to the local market when eventually we do get that open a couple of hours later. But just looking at some of those moves in the US dollar, they really did weigh on some of the commodities. We saw gold come off quite a bit, dropping to around 1,661, and that's been one of the main beneficiaries of the Fed's bond buying program over the past few years. Of course, gold's used as an inflation hedge, and at the same time, when the US dollar is weak, then it does seem a little bit cheaper for investors, so it does get well supported by that. So going ahead, it's going to be very interesting how this all plays out. Of course, everyone's continuing to look out for that US data to see if we can get strong signs of improvement, particularly from the employment market, where they have really pinned it as a key threshold for when this bond buying program will finish. At the moment, Fed members are divided between an end mid 2013 or end of 2013. So this will be very interesting indeed to see how the data plays out and how it will influence the US dollar going forward. We also have Fed member Yellen on the wires later today. Now, we might be able to get a bit of a better read of what to expect from the Fed going forward and exactly what their school of thought is with these recent FOMC minutes. So that will be keenly watched by most traders out there. Now, the dollar yen's probably one of the most interesting pairs. It managed to push higher, traded at 87.36 again on the back of those minutes. Of course, this will appease Japanese officials when they return to trade today. Of course, Japan's been closed most of the week, and with the yen having such a strong bearing on how the Nikkei trades every day, this will definitely be one of the key factors and could be the key influence to Asian trade. Of course, we're not expecting too many leads from the local market without much economic data on the calendar. So I think the return of China and Japan to trade will be could be a catalyst to how the market performs today.
So Stan, are you expecting a pretty lackluster lead then to follow on from Wall Street?
Yeah, absolutely. At the moment, we're expecting a relatively flat start at 47.39. Now, we don't have local economic data like I was saying before, so we'll wait and see how Japan and China open today. They'll probably give us some pretty strong, significant leads as to how we'll trade. We're expecting the Nikkei up over 3% so far, so we'll have to wait and see if nothing really changes between now and the time they open, and see if they can maintain this gain or even extend on this gain given the yen weakness. At the same time, we've got a 1.5% gain for the week so far, so that will carry us through going into the end of the week. Of course, with our two biggest sectors firing, which is the materials and financials, then it's quite it's not too surprising to see how the markets performed all week. We've got Commonwealth Bank now being a $100 billion company and still trading near record highs, so it's quite hard to justify selling it at those levels for most traders. Most traders will be hoping it can extend on those gains, but of course we'll start hearing some rhetoric soon enough, with some analysts feeling it's getting a bit too expensive. But given the yields that some of these banks have, it's really hard to say they're expensive because they're great yield play, and you can't rule that out at all. At the same time, we've got most commodities pulling back, so this might hamper some of the resource names, particularly in the gold space, where we saw gold pull back significantly on the back of that stronger US dollar. But at the same time, we've got iron ore jumping to 149.80, so that should support the iron ore miners, although some of them are indicating a bit of a weaker start, particularly BHP, which is looking like it will open below $38. I think we'll continue to see investors wanting to pile into some of these recently underperforming materials names, just mainly as on the back of that strong iron ore price.
Stan Shamu from IG Markets, thanks for your analysis.
Thanks, Ingrid.
And as Stan just mentioned, the Commonwealth Bank has reached a market capitalisation of more than $101 billion for the first time, solidifying its position as Australia's biggest bank. It comes as yesterday's close on the S&P ASX 200 reached a 19-month high off the back of continued global optimism.